newsletters.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start off like we usually do with the German DAX. As you can see, we're down here near some really key patterns and support. And with the news as bearish as it can be, it seems to be holding, at least thus far. If we take a look at the FTSE, you'll notice that it's also holding near a double bottom there. We've got a couple of ABCD patterns, and of course with Brexit in the news, you know, anything could happen, and it usually does. We had a question this morning about the fact that we have this full moon coming up here, and we have a new moon coming up here on the the full moon is coming up on the 25th, but I would like to mention that I believe that we're going to be entering one of the strongest periods of volatility starting today, going all the way into that full moon area. I think we're going to see some really big swings and things. We've already seen some big ones, but I think it's going to be even greater. So whether that's going to mean much or not, you know, we'll have to wait and see. This happens to be a day that we know as combust, where Mercury, I believe this is, my eyes are so darn. Yes, we have Mercury is conjunct, Mercury is conjunct Venus today, which is that's not combust, but Mercury is conjunct Venus today, which is a pretty good turning point for some things, but you know, we've had some pretty good swings. Folks, I believe we've made let's just do one thing at a time here before we get too tangled up here. Let me just take a look at one thing. I want to show you, let me show you the money. That'll be the first thing to look at. Let's just get up here and put up the chart. This is the banking index. Okay, now it's very important because you're gonna have to do some of this work yourself because I can't do it all because it's just it'll take longer than an hour. But if you look at the banking index, we made the exact 61% retracement from the August low. That was the eclipse. It was right on, almost within just a point of the thing. We had a pretty good rally. It's held relatively well. You notice that that was our target on this all along. Right at that 99 level, and it's hit it. I don't know if that's going to be the bottom or not, but you know, this market is not falling apart like we've seen in previous times when it's had big breaks like this. It's just really not doing it. And if we look at, I'm going to let you. Well, I'll do one other one, and then you guys can you can decide what you want to do with looking at these yourselves. They're all in the newsletter. If you get that, I put them in there, and I tried to show what they meant. Here's the low from February in the New York Stock Exchange Index. It made an exact 78% retracement on Thursday and Friday. Double bottom. That should be a very, very positive sign. All I know is if we go below that, shut the front door and raise the rent, we're going to be dropping big time. But whether that happens or not, you know, we'll have to wait and see, one thing at a time. That's the main thing. Now, people have been talking about this is a crash scenario very similar to 1987. We don't know that. I mean, you know, there's a possibility of that, of course, but I think it's something that is relatively important. What I'm going to do now is, because I put something in the newsletter that, thanks a lot, Marshall. I know I can hear the sound of one hand clapping. Thank you. Best to you and Lynn. Let's put up this chart here of the stock market back in 1987. The important thing to remember here is that we had a similar type break in just like we've had now. But notice that you see that blue line. I mean, that's something you're not going to see on my charts very often. This isn't my chart, actually. This is the 200-day moving average. That's where the market stopped on October the 16th, and then of course on the 19th it was Katie bar the door, and you know, it had the big move down. But anyway, that's the type of thing that we're looking at. We're not seeing that yet. What we really would need to see, and that is, if you look at that same chart, we had that nice move down. Really, that's all it was. We went down there, tested some major support. Now, if we get a 2 or 3 day rally that doesn't go anywhere and then it starts down, then you've got problems. But right now, if you look at all of these, I mean, every single index that we follow hit exactly at a Fibonacci number. I mean, it was, I couldn't believe it when I was seeing it. I said, oh my God, I said, every single one, what does that mean? I said, it must mean something. And since I don't follow fundamentals, I assume that this has got to be mother, God, and country. You know, run, Forrest, run. Life is like a bucket of chocolates. All right, let's let's move on to talk about a couple other things that we really need to visit this morning. That is, folks, if you're in the sugar and the coffee, I don't know what to tell you. I got out on Thursday on that stuff, and I you know, I don't know how much higher it's going to go. It's going to go without me, but it was up 11 days in a row, and it's up again today, you know, with the rest of the markets down. One other thing that I did want to keep in mind here is to show you one other thing that is yes, we could easily, a possibility of the ABCD. Yes, it could easily do that, Maria, without any trouble at all. And of course, with these markets as wild as they are, and they've really tried to start making bottoms. We said that on Wednesday when we were watching these things like the IWM and the NASDAQ. And, you know, the NASDAQ stopped, you know, pretty much spot on at a 61% retracement. Take a look at this. I mean, this is really, you can't make this stuff up. I mean, there's the 61% retracement from the March low, hit it exactly. You know, I mean, just spot on. And at the top, you had 3 drives to a top. You had a Gartley pattern. Now, if you go below that level now after a 2 or 3 day rally, then it's Katie bar at the door, and then she starts down big time. You know, that's the main thing that you want to be looking at. One of the markets that we've been very bullish on has been the gold and the silver. And if you'll notice here, you know, in the gold, we expected it possibly to get down to that 1212 level. We couldn't even make a lower low than Friday, and we've already taken out, we went all the way up to 1236, which was the 1.27 number of the expansion of that move from September through October. That was also the perfect ABCD. So if we can get above 1236, we'll be looking at 1256. But if we get below 1219 now, I don't think that'll happen today, but you know, they don't always listen to me. Then there'll be a much more severe correction. The only thing that has been the negative part of the gold silver was the fact that the silver can't even get out of its own way. It can only make a 78% retracement when the gold is making 1.27. So I really am not sure. I mean, it should have been a lot stronger, but it's not. But you know, they don't always follow the way I like to see them follow, but neither there. But anyway, that's what we're watching in these. They still look bullish. Nothing's changed their mind. It's strange, when it was down about 1185, you couldn't get anybody to buy it, and now it's at 1236, and everybody likes it. So that's something that I think is important. Someone asked me a question over the weekend on the on Lehman Brothers. I'm going to bring that chart up when we get back from the break, because I have some strong thoughts on that. And also, I think that we'll take a break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted the biggest crops in the world. The number one, of course, is corn. Number two is rice. And then the third one, I believe, oh dear, I did everything but double check everything. Hold on, and I'll bring up the rice and the corn and, oh dear, what was the third one? Sugar. Sugar is way down the list at 190 million. Of course, it's the way it's getting, it's already trading above 13. We had that 3 drive to a bottom pattern down there at 1050. And you realize that coffee is up 23 cents from that 3 drive to a bottom pattern? Someone asked me an email over the weekend, do these things ever fail? Hello, they fail all the time. If you'll remember, we had one in the Hang Seng that we weren't involved with, but we were expecting it to happen, and we had that big gap down below the 3 drive pattern. There was no way you could have gotten filled on that because of the big gap down, but we'll see what happens. These next 2 days are really important. Now, I've had someone asked me to talk about Lehman Brothers. And what I did is I went into Google and I picked up some stuff here. I wanted to just show you the chart of just a minute here so I can get it up here. I can show you the chart of Lehman Brothers. This is back in 2008. Remember, this stock was around 70 bucks around Christmas time, and then it started down. You'll notice where that first red square is there, and around March, we went sideways for about 2 months into early May, and then we started down. Point 2 was the key spot. That was when we broke below that. That was a really highly indicative of something happening. That was long before anything occurred. But the really big one occurred on point 3 there, because once we went below that, we were into that September period, and that's when they took it to zero, and well, 10 cents a share, whatever it happened to be. But that's what really happened. That was orchestrated by our good friend Hank Paulson, the former CEO of Goldman Sachs, who was the #1 competitor for Lehman Brothers, and they were able to get their #1 competitor out of the way, which is a pretty good deal for Goldman Sachs. But they crowd fouled. Anyway, let's take a look at one other thing, folks. When I look at the news this morning and they say that 11 assassins from the Saudi family go out to kill one person, are you kidding me? Give me a break. Yes, 10 more than anybody needs. I mean, I don't understand the news, what they say or what they do. That's why I shouldn't listen to it too much. But boy, the stuff that they put out these days is just really, totally amazing. Now, we've had a question about the Bitcoin this morning. Let me get this up here to take a look at it. We're really heading down towards the $3,800 to $4,000 a share in the Bitcoin. As we get closer, I will do the longer-term ABCD patterns so that you'll be able to see that we are going to get down. I mean, I've not traded it yet. I probably never will. But, as more and more of these things come up, much like we're seeing with the marijuana stocks, there'll probably be some. It's all about blockchain technology. It's not so much about cryptocurrencies. But we will see, how some of these things, fill out as we go through looking at some of these things. Now, one of the things that I did this weekend was look at the FANG stocks just to show you what they did during this mini crash that everybody talked about, which was really nothing. You can see what Apple did. It made a beautiful ABCD pattern there at 12 and a half. Immediately rallied about $14. If you take a look at some of the others, I did some of the FANG stocks that you could, keep an eye on them just to see, how well they did. Here's one. This is Google. Just give me a second here, and we'll put the chart up for Google. Again, another perfect retracement. Just absolutely spot on. I mean, every one of these stocks. I mean, it was truly amazing that they were. And Google, look at Google here. Just take a quick look at this. Google made the exact same retracement that it made during January and February and March and April, exactly the same amount, and sitting right at a major fib number. I mean, these are big. Let's take a look at one of the banking stocks, one of the big ones. Let's look at JP Morgan. Look at that. It's exactly 78% retracement of the July 5th low. I mean, the reason why, let's just calm down, Larry, calm down. The reason why these numbers are so important is because if we get just a little bit of a rally, boys and girls, and then they turn down, then you're looking at trouble in River City. Then they will go down a far, 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 far way. But right now, that is not happening. So let's keep in mind that we'll be looking at these pretty good to see. Now, the gold just made a 61% retracement of that short range at 1228. If we get below 1225 in the gold today, there could be a possibility of a reversal type day. And the reason why is, I'll go over this again. I mentioned the volatility that we're looking at between the 15th and the 24th of October. The reason why I bring that to your attention is the fact that we have that full moon, which happens to be a special full moon, as we've found out from our good friend Mr. Norm Winsky from Astro Trend. And also we know that October has a tendency to show lows as a low, so that could be a major low that we're looking at. And so that period between the 15th and the 25th should be quite active. And the reason why the 15th is so active is because we started out with that Venus conjunct Mercury. And that is, those are the two closest planets to the sun. And it's like a super full moon in my book, and also in the book of our friend Al Larson from Money Tide. So all of that stuff should fit into some pretty good volatility. Now, whether that, we've already had some, we'll see if it's going to be, see if it's going to be, moving or not. We'll have to wait and see what happens. Just keep it in mind, because that's what it looks like. We do have a potential bottoming pattern in the stocks, in the stock indices. I've mentioned it before. I put all of them in the newsletter, so that if you want to review that, just go take a look at it, because they're all there. I mean, every single one of them, was, pretty much spot on. But most of these stocks, the FANG stocks, did not cause any problems at all. I mean, they were just normal corrections. Nothing was really dramatic like what we had in January of last year. We haven't seen that, of course, at all. If we take a look, this is something that I bring to your attention. This is from October of 2008. When we had the big move down. This was post Lehman Brothers, but you can see the days that we had where the market had big drops. And remember, it was trading at 10,000. So when you get a drop of 348 points, that's a drop of 3%. If you get 3% now, you're looking at 700-800 points without any trouble at all. So just remember that these things get pretty active. This is another reason why I was possibly thinking that we could have some extreme volatility during this time, to see what is going to happen. We will have Norm on, I think, the day before that full moon on the 23rd, just to see. To give us his 10 cents worth, to see if it's going to be anything really significant or not. But we'll have to take a look. We're going to cover the gold and silver a little bit more when we get back, and also the Treasury bonds. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And one of the things that I posted a chart of silver in here to show you how it's lagging, the gold so badly. Those of you that follow the precious metals, that's nothing new to you. But, because markets don't react the way you think they should given the news, it always gives me a little bit of trepidation. So I kind of watch that. The fact that the silver is not doing very well today, it's up, but nothing like what gold is. Gold broke out to a 1.27 expansion, and we can't even take out the 78% level at 1481 in the Christmas silver. It might yet let later today, but that's neither here nor there. Another one that is acting not very good at all is the crude oil market. If you'll take a look at here, we have a really important bottom here at the $70.50 per barrel level. We had a little bit of a rally last night. We took out the highs of Thursday at 72.15. Then we went all the way down to 70. I think 70.28 or something like that, and then we got back up to 78, 71.80. This is not acting very good, considering all the things that are happening with the politics involved, with Saudi Arabia. So that's another one that is not acting, very good. Remember, long term, the crude oil and the heating oil and the gasoline all made major 61% retracements on the weekly basis, and these were with 3 drive to a top patterns, and those are usually extremely bullish. This could be the reason that we're getting these really minor bounces when you should be up about $1 or $2 or more per barrel, given that type of news, especially in the market that's starting the week out of being oversold, and it's still not rallying. So it might later today, but right now it certainly doesn't have any legs to get it moving, and that's something that I think we ought to pay attention to, because if the news is good and the market can't go up, there's only one place it can go is down. We saw that in the soybeans, the corn, and the wheat, because it was so bearish down there with all the tariffs, that all the news was out, and what did it do? You had tremendous rallies in some of these things, and that's what we're looking at. Yeah, it'd be a better chance of finding Jimmy Hoffa than that from that journalist, but that's really strange stuff. It doesn't make any sense to me why anyone would. Everybody knew that there were 11 assassins. Why do you need 11 assassins? Why not 13? Why not just one? What kind of baloney is that? And first, well, we're not here to do that. Let's look at a couple of charts here that make some sense. Let's just take a look, just because this has been just such a monster move here. We're going to bring up the coffee today. This is where we were on Friday. We hit 118 today, folks. That means it's up 24 cents from the bottom. Now, that's a tremendous move. Now, sometime in our lifetime, we'll probably get a correction here in the coffee, so pay attention to it, because if you get an ABCD correction in that, that's most probably a major bottom in coffee, because it went down and touched some really long-term support, and that's something that would be, really important. Another one that is very important, and that is the natural gas contract. We heard Jason talk about it. If you look at the natural gas, we completed the big ABCD pattern up there at the exact 78% level at 336. We got down to 314. Today we got up to 328. We're trading around 323 right now. If we get above that 336 level, we could easily hit some of those numbers that Jason was talking about if it does that. Now remember, the weather is starting to turn cold. I saw that the low today in Chicago was 30 degrees, so probably going to get a little bit of a cold spell and we'll see how the market moves from that level. Now, one of our listeners from down in Mississippi asked me to take a look at the cotton because they've had some trouble with a lot of water down there, and if we bring up the 20 degrees in Denver right now, whoa. Shut the front door. Coming down to Tucson, Mr. Bill. It's nice and warm. It's going to be about 75 today with a tiny bit of chance of rain. You can see that the cotton has had a little bit of a rally with all that water that we had through the south. We were trading down around $75 a pound, and that was the low. We're trading up around 79 right now. That's only 4 cents a pound into a hurricane. Again, that's not really bullish action if you think about it. So we'll see whether it's going to continue or not. But that's one of the things that you want to keep talking about. Another one that we've been following for quite some time here has been the hog market, and I wanted to bring it up because we're in a corrective phase now in the Christmas hogs. We had that 3 drive to a bottom. Down at 44 level. That's when Mr. Z was recommending it, and also our good friend Rich Anderson talked to us about the fact that was the cost of production on December hogs. They didn't have too much to go to the downside because farmers won't raise the little piglets if they get much below that. And as you can see, we rallied from 44 all the way up to $60, and now we're trading at around 54.5. And there should be some strong support around $50, $51. Now, this is in the face of all the things that are happening in China regarding the diseases and stuff. But, boy, I'll tell you, all the news coming out of China, you should pay very close attention to it because a lot of that stuff is not what they say it is. So just remember that follow the charts. They're going to lead you to the promised land. You don't have to, to worry about whether you're going to see these markets, go crazy to the upside, because if there's more buyers, they're going to be buying. If there's more sellers, they're going to be selling. And that's what you really need to be looking at. Let's take a quick look to see what the market's doing this morning. We got up to 2770 in the S&P, and now we backed off just a little bit. This still has a chance to be making a bottom this week, folks, and we got to watch this potential here, because if we only get this 2-day rally and we don't go anywhere and then go below the lows that we made last week, that is extremely bearish. You don't want to get involved in that. That's one that would just scare your it would scare the handkerchief out of your lapel pocket. I can tell you that, because that'll be one that, will start to come down, much like we saw in October of 2008. That has not happened as of yet, but that doesn't mean that it can happen. Right now, as we look at this morning, since about 5 o'clock in the morning, New York time, I would be watching for some pretty good support somewhere between 255 and 2755 and 2752. Those are the two areas that I'll be watching. Right now, we're just making a 382 retracement here at 2760. If that holds, then it'll look very interesting. But right now, we're really not doing too much. On the foreign exchange front, we've got one market that looks very, very interesting from a technical standpoint, and that is this Japanese yen. We've been highlighted this over the weekend, that had a very strong probability to get down to that 61% retracement at 1160, and we hit 1160 about an hour and a half ago. We've only rallied about 20 pips off that, but that's where we are. We'll be right back. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I've been asked to take a look at the long-term chart of gold. This is one of my favorite things. But you can imagine that big bull market that we had in 1980. It looked like it didn't even do anything, but it was a big one. Anyway, what we've done now is looking at this monthly chart. We came down and we've made the major tests for sure. We tested at 1030. We tested it at 1160, and now we've tested it at 1185. So far, we're trading at around 1231 today. The high was 1236. Silver's lagging badly, but we need to get gold above that 1240 level to keep the momentum going. There should be really strong support at around the 1225 level. In the gold. If it breaks below that, that means we're probably in a little bit of an overbought market, and we could get more of a correction to the downside. But I'd be looking to buy any really nice ABCD corrections on the 30-minute chart because the trend is so very, very bullish. Regarding the grain markets, they still look bullish, folks. The soybean oil looks bullish. The soybean meal looks bullish. Every single one of those patterns look absolutely terrific. I'll bring up the soybean chart because we're going to be switching over to the, let's just get this out of the way here first. We're going to be switching over to the March soybeans, March of 19 soybeans this month as we come into delivery for the Novembers, but we're trading up around that 872 this morning. We didn't get any pullback at all with that crop report. So that tells us if we get above this 880 level, we're going to be looking at something pretty significant. But we need to clear 880. That's the whole thing in the bonds, in the Treasury. Wow, in the soybeans. I was trying to do the Treasuries next, and my mouth was not waiting for the chart. Let's take a look here at the notes and bonds. We'll start off with the bonds. We're very, very oversold. We're down like this is a weekly chart, and we're down like 8 weeks in a row. We had a slight up week because of that little bounce. But we could get a rally all the way up to that 142 level. Whether we get there or not, I'm not sure, but it's very, very oversold, very, very bearish long term. Interest rates are going higher. They're not going lower. regardless of what anybody might want to try to tell you. But if you'll notice here in the Treasury notes, looking at the same thing, we're very oversold. And this one also, we've been down 8 weeks in a row before that slight up week on Friday. And so anytime you get a rally of around 3 points in those notes, I would believe that would probably be it. We have made a major top in a 32-year bull market in interest rates. They started back in August of '82 when I believe the high rate was around 13% for Treasury bills, and that was for the 1-year T-bill, folks. And that was when we had the super inflation running around 12-13%, and then President Carter brought in Paul Volcker, and that was the end of it. He knew how to get things done. Anyway, that changed everything. Now, people are asking questions about potential lines in for gasoline and oil and stuff like we had during the embargo years because of what's going on with Saudi Arabia. Folks, that's 50 years ago. That doesn't count anymore. You know, there's production from everywhere in the world. We're one of the major producers, so you're not going to see that. And look how badly the crude oil is acting today in the face of really bullish news. That's not good price action. You know, you've got something that should be really positive and it's just not acting right. So that's not a good thing. You know, whether that means anything or not, you know, we have to do one thing at a time, but that's what you have to pay attention to. You know, that's really what it's look how bad stocks look, and they're rallying. Hello, everybody. You know, you got to think about something like that this is something that could be very, very important. So let's watch it. Just see what's happening. It's pay attention to what the news is, because it will tell you which way it wants to go. Because if the market has really bullish news and it can't go any higher, it only has one way to go, and that is down. Folks, one of my biggest turning points in my life was in 1976. I had so much corn, so much soybean oil and soybeans on that it was I was approaching limits. That's how I had everybody that would listen to me into that stuff for about 8 or 9 months, and it went straight up. But that day that we got out, the news was so bullish that they said that the only soybeans that would be available in the coming 6 or 8 months would be seen in the Smithsonian only. I wish I'd have saved that off the Reuters machine, because that's exactly, you know, what they were saying. So when the news does not respond to what you've got, boy, pay attention to that, because that's a really important it just really is. It really tells you, you know, which direction the market wants to go. That's we've seen this in so many different areas that we want to watch it very, very closely. We got the November beans up around 875 today. They're getting close to that magical number of 880. If we clear 880, then it's got a chance to have a heck of a run here. But 880 is going to be a little difficulty, because we have an ABCD pattern there in the Nov beans at that point. Plus, we have a 1.27 expansion and a 1.618 expansion up there at that 880 level. So we get above 880, which is only 6 cents away. You could have game going in that November beans. And with that cold weather coming in there, the beans that have not been harvested could be in trouble, and that would cut your crop back a little bit. And then you're looking at something, you know, totally different of what we're paying attention to, at least this morning. So one thing at a time, as they say in the trade. Okay, we had another question. Someone asked about the use of margin. And basically, folks, you know, the margins are set by the exchanges, and then the firms, you know, they set their margin limits around that point, but they're there to protect you so that you don't over speculate. That's one of the problems with the foreign exchange markets, is that they sometimes will give you margin of 200 to 400 to 1, and that's just insanity. You have to be absolutely perfect, you know, to get through something like that, and that has not happened as of yet. So just remember the margins are there for your protection, so that you don't over speculate. So remember that is a really key thing, you know, to pay very close attention to. Regarding the Brexit, another question came just a minute ago about the Brexit. You know, the British pound is actually unchanged, up a little bit on the day. It was down about 80 pips early this morning, early Sunday, and then it's turned around and rallied back. So it's going to be interesting to see if it can stay here. The news again is supposedly good, but the market is not acting that way. So there's another one that could be telegraphing that something is coming that might be a little bit unusual. So those are just a couple of the ones that we're keeping an eye on this morning. The euro has really strong resistance in that 116 level that we've talked about several times. I'll get this long-term chart up here, because I think the long-term euro chart is the one that oh dear, what did I do with it? Well, I have to do the short-term one, because sure I did the long-term, but I guess I didn't. Here's the you'll be able to see the importance of this 116 here quite easily, because we got there again, and we'll see what's going on. Yes, the Russell has turned positive. It doesn't surprise me at all because of that double bottom we made there on Thursday and Friday. But you can see the euro here, those strong resistance at that 116 level. And if that gets above that 116.20, then you got a chance for a little bit more. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and I posted the daily chart of the British pound. Since we're in this Brexit time frame here, you notice that we went a little bit above the 78% level at that 132.20. We got up to 132.60. Last night, the low was around 130.80. We're trading around 131.55 right now, which means the first objective on that first short sale that occurred up at 133 was, of course, at 129.20. That was a perfect 707. That's reciprocal of the square root of 2. And it's so close to 0.618, it doesn't make any difference, really. I mean, that's just the actual number, but the 61% retracement would have been just as good a trade as the 0.707. But you watch it, because sometimes 707 and the reciprocal of that will be 1.414. They happen instead of 1.27, but that's neither here nor there. What I'll be waiting for now is to see if we can make an ABCD here in the British pound down to about this 128.25 level. If we get to that level, I think that would be a good value, because you're going to wash out a lot of the longs. And that would be a spot that if it holds, you can have a pretty good chance. Now, if we get above 133.50 and change and close above that, that's going to be very bullish to the British pound. We could easily see the 140 level, and that could mean maybe everything with Brexit falls into place. We don't know, but there's always that possibility. So keep in mind that that's very important. Someone asked me, what's the most important chart of the day? The most important chart of the day is the news. Watch to see what's happening with the news. Look how badly the crude oil is acting with the news the way that it is. Look how strong stocks actually are, given all the bad news we have there. I mean, Asia was down again, 1.5% in Hong Kong, another 1.3 in China, another 1.5 in Japan. So these markets have got some bottomings, but below these last lows, don't be long. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.